So Bitcoin suffers a bearish monthly close. So we're reviewing this article from CMC. There are no much feedbacks here, just two comments on this article. But meanwhile, we're gonna see the basis of this article. So guys, what we'll do, drop reviews on CMC articles, airdrops, and lots of other ones. So we're gonna be seeing this article to see the full concept. Article was written on a set table of content. We have what now? So dreams of a green Christmas for BTC have been dampened after a disappointing monthly close. So the world's biggest cryptocurrency finished November at 57,005, well short of what many technical analysts had been hoping for. Tuesday's market activity was punctuated by a sharp reduction from $59,000 that came $59,000 uh, that came from after Federal Reserve Chairman Jerome Powell suggested measures designed to stimulate the economy during the coronavirus pandemic may end even earlier than expected. So the central bank's quantitative easing program, which involved creating new dollars and pumping them into the economy, has been a key factor in BTC's rally over the past 18 months. But even as the new Omicron variant of COVID-19 causes alarm, Powell pointed to high levels of inflation as a bigger cause for concern. While inflation gauges increases in the prices consumers pay for goods and services. And although the Fed has long had a target of 2% in place, October's reading came in at 6.2%. So the Fed had previously attempted to play down the current spike as transitory, but Powell has now considered that inflation may remain overheated until the second half of next year. So he added, I think it's probably a good time to retire that word. While too much inflation can greatly diminish the spending power of the cash in your pocket, it has helped elevate demand for BTC. Cryptocurrencies' fixed supply of 21 million means it has long been regarded as a hedge against inflation store of value. So, guys, we have a CMC's podcast here which you can check out. So, December is going to be significant for the global economy and for the markets. Scientists are now racing to learn more about Omicron variant. Key questions include whether it is more transmissible than previous strains of COVID, whether it causes more severe illness, and whether it is more resistant to vaccines. It could take weeks to get answers. Then we have US President Joe Biden has described the Omicron as a cause for concern, not a cause for panic, and stressed that lockdowns are not currently necessary. And while Powell said the variant could bring fresh uncertainty, he doesn't believe its effects on the economy will be remotely comparable to the carnage seen in March 2020. So the Fed will update its policies 2 weeks today, on December 15th, delivering confirmation on whether stimulus will be wound down faster and potentially hitting on when interest rates may be increased. So both events could prove bearish for the crypto markets and stocks alike. And this brings us back to BTC. Wherever enthusiastic traders are hoping to emulate the dramatic price surges seen in 2013 and 2017, November's close of $57,000 was dramatically lower than the worst case scenario set out by the popular crypto analyst Plan B, who had predicted that BTC would currently be priced at $98,000. This came after his floor model nailed the closing prices in August, September, and October. On Twitter, he wrote, no model is perfect, but this is a big miss and the first in 10 years. So Plan B went on to openly ponder whether November's tepid performance was an outlier or a black swan, and said he planned to give his floor model one more month to find out. The analysis stressed that this shouldn't be confused with the popular stock to stock flow model, which predicts that BTC's average price should stand at about $100,000 during this halving cycle. So, though endless analysts on crypto Twitter are sharing charts that suggest BTC's on-chain metrics are healthy and ripe for a bullish breakout, BTC's failure to even break through $6,000, let alone surge to new all-time highs of $9,000, should cause concern. And the founder Plan B himself recently launched a Twitter poll asking followers whether $9,000 was the top for his halving cycle suggests his conviction may be waning slightly too. So Brent Donnelly of Spectrum Markets recently told the Reuters news agency there should be more agnostics focusing on the fact that we are in a bad part of the cycle for crypto year. The corrections could be epic. Make sure you can survive winter. So these are some of the updates you want to look into. I hope you find it informative. Should buy keys, stay safe. See you in our next upload. Should buy keys and one love.